Good morning and welcome to the Brown Shoe Company Investment Call. My name is DeRoy Simmons. I'm the CEO. Today we're going to kind of outline our strategy over the course of the simulation, as well as some of our high moments. We'll also hear from our Chief Marketing Officer, our Chief Operations Officer, as well as my CFO, Minwon Kim. At the beginning, our strategy throughout the course of the simulation was to provide a highly differentiated product and try to capitalize on the cost within that premium shoe segment. And as CEO, I wanted to remain flexible. We initially made some soft commitments, but the long term was to remain flexible, but to pretty much crush our competition. So in doing that, when we look for white space, we provided a product with a higher price point, higher model numbers, as well as a higher SQ. And as we began to gain market share through our marketing efforts along with our operational efforts, which were done marvelously, we began to see some good returns. By the end of the simulation, we can look down at our earnings per share. They were at $10.31, was an industry high for Industry 4, of course. Our return on equity was 27.4%, which I think returns a lot of dollars spent to our shareholders, and you should be pretty much happy. So is our stock price. We entered the game with the highest stock price within our industry at $170. With that said, we did not win Industry 4. We lost by a point. And of course, if you don't come first, you come last. And so with that being said, I think we had a strong company that had a strong strategy of just differentiating our product. Now, throughout the course of the game, our finance guy, Minwon, he'll talk a little bit about some of the loans that we took, some of the strategies that we used there. But for me, the cost was didn't really. I wanted to have the best cost, but at the end of the day, I just wanted to have the best product. And I realized from a operations standpoint and marketing standpoint, it's kind of how you position yourself amongst your competition. Therefore, I focus a lot on our competition. Initially, if we can look back at year 14, we saw the Happy Company come within our white space. And so we used a few strategies by building up capacity, building up our model numbers, and then dropping our price sort of below theirs, and they had a lower SQ, and so they kind of hurt them in the long run. So we look next to around the next year 15, and we see improvement. Another competitor try to come into our differentiation, our premium segment, and again we use the same strategy where we looked at their SQ, we looked at their model numbers. We knew we had a superior product, and yet we wanted to again drop our price and kind of show them, hey, you want to go somewhere else. So if we look at our overall strategy, we noticed that a lot of competitors in our industry went for what we call the Walmart, which is going to provide a lot of models at a low cost and a low price point. And so if we see a lot of the competition going to that area, of course we're going to pivot and try to go as far up and to the right as possible if we were to look at a 4-quadrant map there. So that's exactly what we did. We saw another company, Comfort Shoes, completely change their strategy. And so they changed their strategy and actually was in a pretty well positioned through the simulation up until that last year, in which after we had picked off all the other competitors within our premium market, we went after them and we dominated them as well. The winner of our group was, of course, I wouldn't say it's the biggest, but it was the most efficient, low cost, low SQ, low price point firm within Industry 4, and that was the Duck Company. I believe with one or two more rounds, we would have dominated them as well because we have a superior product. Our costs were pretty much the best within the differentiation, the premium segment, and we were looking to dominate once again another competitor. However, we lost by 1 point again. So if we look at the overall strategy, Again, we provided a premium product to the industry. We dominated in terms of endorsements as well. We had at least 5 endorsements, which you'll hear the marketing chief marketing officer talk about. But our overall strategy was simply to provide a premium product and kind of differentiate on different means in terms of our marketing efforts and our operations. Again, I appreciate all the investors. As I said, one of my main goals as the CEO was to try to take a snapshot of the industry and come up with a strategy that still stayed on target with the premium segment, but crushed our other competitors. I think we were quite successful from that point. We'll go ahead and move on and hear from our CFO and our COO and our marketing officer, and they can kind of go into the details of our strategy. But again, I'll be around for any questions after the investor call, and I look forward to hearing from you. Thank you.